This indicator predicted the 2008 stock market crash, the crypto bubble of 2017, and nearly every major market reversal since, days in advance. If you knew about it back then, you could have avoided massive losses and made life-changing gains. In this video, I'll reveal exactly what this indicator is, how to use it, and at the very end, I'll share my secret strategy that takes it to a whole new level. You do not want to miss this. Look at this. This is the 2008 stock market crash, one of the biggest financial collapses in history. Millions of people lost their life savings as the market plunged 50%, and most traders never even saw it coming. But imagine if they had this indicator. It signaled a massive trend reversal days before the crash even happened, giving anyone who had it a chance to protect their money or even profit from the collapse. Now, let's fast forward to 2017. During the peak of the crypto bull run, Bitcoin was hitting new all-time highs. Euphoria was everywhere. But if traders had this indicator, they would have seen a warning sign days before the market collapsed. And soon after, Bitcoin dropped over 80% in one of the biggest crashes in crypto history. But here's where things get crazy. This indicator hasn't just predicted these two crashes, it has signaled almost every major market reversal for years, often days before it happens. That means if traders back then had this tool, they could have avoided massive losses and even capitalized on the biggest moves in history. So the question is, what is this indicator? How does it work? And most importantly, how can you use it to get ahead of the market today? Well, let's break it down. Alright, let's get straight to it. This is the indicator that reveals trend reversals before they happen. It's called the gradient trend filter by Chart Prime. And I'm gonna break it down so you can start using it on your own trading today. At first, it might look like just another trend indicator, but it's far more advanced than a simple moving average or oscillator. This tool gives you real-time picture of momentum shifts, which means no more guessing whether a trend is about to reverse or keep going. Now, let's break this down piece by piece so you know exactly how it works. This is the core of the indicator. Unlike a moving average, which reacts after price moves, this trend line is noise filtered, meaning it smooths out the market's randomness and only focuses on true momentum shifts. When it's green, the market is an uptrend. When it's red, we are in a downtrend. Now, this is where things get really powerful. The gradient cloud. This cloud surrounds the trend line and visually shows you how strong or weak a trend is. The colors change before the trend line flips, which means it's an early warning system for trend shifts. If you see the cloud turning red while in an uptrend, it's telling you momentum is weakening and a reversal could be coming. If you see the cloud turning green in a downtrend, it means sellers are losing control and a bullish move might be on its way. The last part of this indicator is the trend shift markers. These orange diamonds only appear when a trend reversal is confirmed. If you see one of these appear, the indicator is saying the trend is done, time to pay attention. And here's the key, when you combine all three of these elements, you get a complete roadmap of what's happening in the market right now, instead of reacting late like most traders. Most traders rely on indicators like moving averages, RSI, and the MACD. But these all have one major flaw. They lag behind the price. That means by the time they tell you a trend is reversing, you've already missed the best entry. But this indicator is designed to be proactive, not reactive. Instead of waiting for confirmation after the move has already started, it shows you early warning signs before price fully shifts. That gives you a huge edge in the markets. So now that you understand what this indicator is and how it works, the next step is learning how to actually read it correctly. Because if you don't use it the right way, you might still get the signal wrong. Let me show you the right way to use this tool so you can trade with confidence. When reading this indicator, there are three main things you need to focus on. The first thing you should always check is the gradient cloud. This is your early warning system. If the cloud starts turning red in an uptrend, momentum is weakening and sellers are stepping in. If the trend turns green in a downtrend, buyers are starting to take control. Most traders ignore this step and wait for confirmation too late. But the key is, if the cloud starts shifting colors, pay attention. A trend reversal could be coming. Next, you want to confirm what the cloud is telling you by watching the trend line change colors. Once the trend line flips from green to red or red to green, that's your strongest confirmation indication that the market has officially shifted. But be careful, if you only rely on the trend line without checking the cloud, you might be entering too late. Always watch for both to align for the best trades. Finally, the trend shift markers. This orange diamond should be your last confirmation. This tells you that the market has fully committed to the reversal. If you see the cloud shift, the trend line change, and the orange marker appear, that's a high probability setup. This means the market isn't just temporarily pulling back, it's fully shifting directions. Before you start using this indicator, there's something you need to know. Most traders get it wrong. They think they're following the signals, but they end up making the same critical mistakes that cost them money. So let's go over the top 3 mistakes traders make with this indicator, so you can avoid them and trade smarter. One of the biggest mistakes I see is trading off just one signal. The trend line flips, boom, they enter, but that's a huge mistake because it's not enough confirmation. You need at least 2 of the 3 confirmations. If the cloud and trend line agree, now you've got a high probability setup. Next mistake is ignoring the gradient cloud. I see this all the time. Traders only look at the trend line, but they completely ignore the cloud. And if you do that, you're missing the most important early signal. If the cloud starts shifting colors before the trend line flips, that's a warning sign. If you ignore it, you'll get caught in fake outs and lose money. Another mistake I always see is trading against momentum. This one is simple, but it happens all the time. Traders see an uptrend, but because they think the market is too high, they try to short it anyways. If the indicator is clearly showing an uptrend, don't fight it. Let me show you my secret strategy for using this indicator to maximize your profits. Here's how it works. I call this the GTR strategy. It's ridiculously effective at catching trend shifts early, and it follows a 3-step process. Step 1, wait for the gradient cloud to shift. The first thing I always look for is a color shift in the gradient cloud. If we're in an uptrend, I wait for the cloud to start turning red. This is my early warning that momentum is dying. If we're in a downtrend, I wait for the cloud to turn green. This is the first sign that a reversal might be coming, but we're not entering yet. Next, I wait for 2 confirmations. First, I want to see the trend line flip colors. If it turns red after the cloud has already shifted, that's a major signal. Then if I see the orange diamond appear, I know the market is fully committed to the reversal. The mistake most traders make is jumping in too early, but the key is waiting for all 3 confirmations. If they align, we have a high probability trade. Once I have my confirmations, I enter on the next candle close after the trend line flips colors. I place my stop loss above the recent high or below the recent low. This keeps my risk tight. For my first target, I usually aim for 2 times my risk. So if my stop loss is 10 points, I target 20. But if the cloud stays the same color, I let the trade run for even bigger profits. Now, let's look at a real example. Here's the trade I took using this strategy. The cloud turned red before the price reversed. The trend line flipped from green to red, confirming the reversal. The orange marker appeared, locking in the signal. I entered right after the confirmation, placed my stop loss above the last high, and aimed for a 3-time risk to reward ratio. And look what happened. A perfect reversal. This is why I love this strategy. It's simple, effective, and keeps you ahead of the market. But the key is patience, waiting for all confirmations before entering. So now you know exactly how to trade using this indicator. But here's the real question. What happens if you don't use this strategy? Well, let me give you a final warning, because if you're still trading the old way, you might be making a big mistake. Here's the truth. If you're still trading without this, you're at a serious disadvantage. The market doesn't care about emotions, opinions, or gut feelings, but it does leave signals, and this indicator catches them before most traders even notice. You could keep trading the old way, guessing trends and reacting late, or you could start seeing reversals before they happen and getting ahead of the market. Now, I want to hear from you. Do you think this indicator is legit? Would you try this strategy in your own trading? Drop a comment below and let me know. Like this video if you found it helpful, subscribe if you want more breakdowns like this, and if you want me to test this indicator live, let me know in the comments.